Good morning or good afternoon, all depending on where you're joining us at today. Happy Friday. I love Fridays. I hope you all have had an awesome week. And Fridays are the day that we kind of count and see what we did all week, right? So, Fridays are always a great day for me. Like I mentioned before, it's also the day that I plan my weekends. Yes, I'm short notice guy. All my friends, all my family will tell you that I'll probably be late to my own funeral. So, yeah, that'll probably happen, but that's okay. What's important is if you show up, right? And I always show up. So that's what's going on for my weekend anyway. I will be working, of course. Um, Make sure I'm here to support all you boss ladies and boss men who may need a pre-approval and some numbers sent out to them. So I'll definitely be here for that. But welcome to Creating Opportunities. This is where we discuss ways you can brand yourself with Rocket Mortgage and myself. We can collaborate on different things that you feel like that you want to pursue in your business. Maybe some new ideas. Maybe we just fine tune some things that you're already doing, along with some of the things that I can help you with on the backside. Um, those things turn out to be pretty good relationships. All right. So I'm your host, Bill Haga. I'm an executive loan officer with Rocket Mortgage Local. Always stress local because I have local pricing. Local pricing means cheaper pricing, right? So on a $500,000 purchase, your client could save over $5,000 by working directly with me versus going online, filling out an application, and going with our call center in Detroit, Michigan. All right. So that's great information to know. That's over a $5,000 savings if they work with me instead of our general office. All right. So just another way that your client can save some money there. All right. So today's agenda, we're going to dive right into this because we've got a lot of stuff happening. The government shutdown, how it's still affecting things. Yep, still got issues there. Our DSCR program went live. Thank you for that. Love that program. Fannie and Freddie, right? Fannie Mae and Freddie Mac, the two entities that buy up the most mortgage backed securities. Because they do that, they get to determine pretty much all of our guidelines because they're buying that paper. They actually lowered their minimum credit requirements. So I'm excited to talk about that. Fannie Mae, Freddie Mac, FHA have also increased their loan limits for 2026. Yes, indeed. Values are still going up. It is a great day to be in the real estate business, right? We love when values are going up, especially when we have our own real estate that we own. Right? We just don't preach, we actually do it, right? I know there's a lot of boss ladies in here that are buying properties themselves, pulling cash out, especially with this DSCR program. We're ripping cash out to go buy two more properties. Okay, I had a fellow teammate, Lee, said that he really didn't understand the program, but he had an investor that he knows personally, and he knows that he's got a property that's paid off. And I said, well, Lee, he's the best candidate ever, right? Let's show him that he can pull some cash out of that property and then go buy two more properties. He's like, really? He could do that? I'm like, yeah, let me show you the math. If there's a program out there that's going to take a somewhat experienced investor, right? Anyone who's already collecting rent, all they need to do is have one investment property um, in order to qualify for our program. This, once again, is not for the beginner. Okay, this is a savvy business investor program and should really probably be really limited to the experienced investors out there. Okay, because once again, too many, too much, too fast. everything come crumbling down, right? And that's the last thing that we want anyone to be set up for. All right. We're here to make sure that you achieve all your goals, not fail your goals. Okay. However, it takes some planning, takes some understanding, right? Take some accountants. Make sure you don't end up owing some money at the end, more than what you would normally owe. Okay. So be patient is my best words when you're diving into the DSCR program, okay, as an investor. All right. So all super exciting stuff. Um, I love the fact that loan limits are going up, right? So what used to happen, and it's kind of different these days, which is just strange. So back in the day, and I say back in the day like it's been, 10, 15 years ago, but it's really just been, a few years ago. Um, Fannie and Freddie rates were always, a good point, a good percent below jumbo pricing. These days, that's not the case. In fact, a number of days this year, our jumbo pricing was better than our regular conventional conforming pricing. All right. So if you're not out there chasing the bigger properties, right? I call those whales. I like to go whale fishing. If you're not doing that within your month of planning, that's a big thing you need to start planning for. All right. If you don't chase bigger properties for listings, you're never going to get them, right? It's just like us on the loan side. Normally, 9 out of 10 times of what we focus on is the business that we end up bringing in. When interest rates drop, that's like a refinance boom, if you will. So automatically when that happens, we're reaching out to our purchase clients, right? Because we're letting them know, hey, your buying power might have just went up, or that rate just went down, right? So now you're below $2,000 payment like you wanted. Let's get this house, right? Outside of that, it's all refis. So at that moment, we're reaching out to everybody that we can who fits within that refinance box, right? Rates got to get down to a certain point in order for everyone to qualify, or each person to qualify based off of what rate they already have. Okay. So these are the things that excite me on a Friday. Isn't that funny? All right. So let's dive into this. So the government shutdown, it's still affecting things still today. I know they're back to work. However, there's a backlog. Miranda and I spoke about this last Friday. We have a client who is buying a VA foreclosure. So we're all ready, including, everybody but the VA, because this is a VA foreclosure. And there's no push in the VA, right? Nothing. You can call all day. You can send 1,000 emails, and they're probably just going to get a little sassy with you, right? Let you know that, hey, we appreciate you, but we'll call you when we know something. Till then, have some patience. So that's what we're doing. We're having some patience. We even had a little joke that that Miranda's client was acting as if he was going to the title company, which was pretty funny, knowing that we weren't closing. That was his, kind of ha ha and a punch in VA's face. But it was pretty funny. I laughed. Miranda, of course, laughed. And so, it's nice to be able to joke about things and understand that things are just totally out of your control. And we just have to accept that. Sometimes that's tough for others, a little easier for some of us. But unfortunately, it's just the way it is. All right. So, but the government's back to work. They're doing their thing. Now it's just a matter of them getting to your file. All right. So, the best advice I can give is just make sure that you're communicating with your clients if they're caught up in any kind of VA issues at the moment. Just keep them calm. Let them know everything's going to be all right. Okay. That's half the battle, is containing anxieties, right? We all have different anxieties and different levels of anxieties. So, I would suggest just staying informed, keeping them informed, and just explaining to them you're going to close the moment that you can. Right? Simple enough. All right. Our debt service coverage ratio. I know I don't even like to say that, but I do like the DSCR program. And that's exactly what I'm talking about now. So the DSCR program came out. This is the #1 investor program. Okay. So do me a favor. I say this every week. Go back through your client list. If you've got an investor or someone who ever said, "Hey, I want to be an investor," we want to talk to them, right? I mentioned before, this isn't a beginner's tool. Okay. This program is a little more advanced, and you've got to have some experience in order to qualify. Okay. But we can set these people up, right? If they're sitting there on equity, we can pull some equity out. They can go right ahead and buy. They don't have to use the DSCR program, right? Income works out. What's the matter? They just showed the documents. Okay. But we get them in position for next year or in 6 months. At that point in time, now they're experienced. Now let's go get them some properties, right? So once again, if you got a property that's paid off, that property will probably get you two properties. This is what I used to teach a lot. Right? I used to teach people how to buy multiple properties, and this is one of the ways of doing it with this program. Okay. So if you've got any savvy clients, you've got any clients out there that are interested in being, having a real estate portfolio, they're looking to buy, 10, 15 homes, something like that this program is built just for them. All right. They can have up to 20 properties. And the rate, I was expecting the rate to be a lot higher too. I mean, the rates are in the sixes. Okay. They're in the sixes and sevens. Mind you, they can have a prepayment penalty or not, right? The longer the prepayment penalty, the lower the rate. It's a nice little trade off. And you make that decision based off of how long you plan on keeping that property, right? Or about the time you think you may want to refinance and pull cash out to go buy another property. All right. So I come to realize and come to find out that, over my 23 years, I've created quite a few millionaires I wasn't even really aware of. But from the time that I spent in Chicago and was teaching people really how to utilize this program and leverage their equity that they have in other properties. Mind you, this was the same time that the condo conversions were going on, right? So you had an apartment building, had 15 units in it. Well, that just became, maybe 10 condo units that they sold individually. So a building was originally worth 300 grand. Once you divided it up, I mean, each one of those condos was now worth 350 grand, right? So huge. I was huge back in the day. I miss those times. Those were pretty exciting. Okay. So that is really the biggest thing when it comes to the DCR program. You don't have to show income. You don't have to show your employment, nothing like that. There's no DTI. We don't even use DTI for these programs, right? So as long as the monthly income off of that property is equal or greater to the debt, right? Your PI, your principal and interest, your taxes and insurance, HOA, flood, whatever else can make up, that mortgage payment, that mortgage debt per month. As long as that equals one or is greater, the property qualifies, right? You may need to put down your 25, 30%, this depending, or more, depending on what that ratio is to get that ratio in check. But that's money. I mean, these things close in a couple weeks. You really just need an appraisal and clean title. And as long as the rents cover the debt, we're in good shape. All right. So this is a great investment program, All right. If you have investors out there, I want to talk to them about this program. If they're not using this program, they're still trying to leverage their bank statements and their financials and all that. No, you don't need to do that. This is much easier. All right. Much cleaner, less paper. They close faster. And my God, the interest rates are amazing on them. I mean, this used to be like like I said, it was always a good 1% higher. In some cases, 1.5% higher, but it was still a program that allowed you as an investor to purchase a property without showing any of your financials, right? Nothing worse than that, especially when you're an investor, right? Now we still have to list all the properties that they own. All right, they don't get out of that. We still have to list all the properties they own. They can't own more than 20. They can close in an LLC, which is really nice, right? So I was explaining this to Lee too yesterday. If you're an investor, why would you want to close your properties in an LLC? Was his biggest question, right? He didn't understand that. So understanding insurance, because my wife's been in insurance for like 30 years. Um, your insurance policy for your automobile is only going to cover you for so much. Okay. If you go out there and you get in an accident, God forbid you really harm somebody, kill them, their family comes after you. If they max out your insurance policy, that means that they can go after your personal belongings. If you don't have your business and your personal stuff separated, well, they can easily go after, any properties or anything else because once again, there's obviously a debt that's going to be paid there. Okay. But this is a way to protect yourself is to close it into an LLC or close it in your name first and then move them over to an LLC. Either way works, right? But gives you an advantage of separating things. All right. That's pretty much the DCR or DSCR program. Um, those can go up to $3 million, just so you know what the limits are. Um, that's a 40-year interest only payment for the first 10 years. Yeah, 40 years, right? So once again, if you got a ratio that's tight, instead of using a 30-year, we just bump it back to a 40. At that point in time, the income from the property should, cover the debt of the property. Okay. But 10 years interest only, that allows you to use that money somewhere else, right? Because at that point in time, you're only paying interest only, you're not putting any on the principal. So your balance is kind of remaining the same as the property value increases. Okay. Of course, you can always pay it off sooner, however you want to handle that. Um, all right. So next thing, Fannie Mae and Freddie Mac have removed their minimum required credit score of 620. Wow. That's a huge difference, right? So ever since I got in this business like 23 years ago, 620 has always been the minimum credit score. Now let's talk about minimums, right? When you're on the minimum, when you're on the tier, the very bottom tier, you need to have some strength in that file, right? So we got to have some reserves. We've got to have some 401k account. I mean, we need some things that are going to, make your file a little stronger as you're bouncing off the bottom. So what we've done, we've actually, with a 580 credit score, you need at least a 20% down payment, and then it's just up to the findings on your approval, right? Everyone's going to be different because everyone handles their finances and their credit different in the past 2 years is kind of what we go back to. And then at 600, then that's 20% or less. But that's huge. I mean, that's an FHA credit score, 580. That's what we go to or down to on a 5 or on an FHA. So that's huge. We've also got some loan limits that have increased, right? This normally happens every year. Fannie Mae and Freddie Mac loan limits have increased up to 819,000. Excuse me, for a single family house. FHA is now up to $524,255. If you know VA's cap is right around 2.5 million. And then jumbo um, loan limits have changed as well because Freddie Mac and Fannie's have increased. So the jumbo is up to 3.5 million. And most people understand that if conventional limit is now 819,000, $819,001 now puts you into a jumbo, right? Or you put more money down to avoid the jumbo. Okay. Now, all depending on rates and programs of what makes the most sense. So, once again, it makes good sense to collaborate with somebody like myself who does the math all the time and easy to come up with what's the best solution for us. Goodness, I got a tickle. I think. Oh, let's talk about loan limits and the dates. So, looks like Fannie and Freddie, any new loans that are going to be closing after 12/1 can use the new loan limits. VA, any loan that's closing over or after January 1st will receive those. They, as of today, or I'm sorry, as of the 11/25, they'll get the pricing, but they can't close until January 1st. FHA, um, the case number would be assigned after January 1st. And then for any jumbos out there, of course, that's going to be after January 1st as well. All right. So, of course, those are just single families. There's 2 units, 3 units, and 4 units, and those have obviously gone up as well. Um, so, if you have any questions in regarding to loan limits, please reach out to me. It's nice to see the FHA loan limits go up, right? That allows us to help a lot more people. With just 3.5% down. Debt to income ratios are higher. So, and seller credits are higher. So 9 out of 10 times we can get the seller to cover all the closing cost in those scenarios. I know Miranda and I have done that a ton. Once again, she's the negotiating queen. I call her because of that scenario right there. If there's any seller credit that's needed, I mean, she doesn't even skip a beat. She just knows it's her job to get it, and she goes after it like a ton of bricks. So if you ever need any advice on negotiating, I would definitely call Miranda for that. All right, well, that's all I have for today. Thank you all for your collaboration. And if we haven't spoken yet, please reach out. Let's schedule a day and time that we can go through your business. We can talk about different ways that you want to grow. We can figure out ways that I can help in that path. Mind you, we have moved our underwriting up to the front of the process, which is helping a ton. Files are closing like super fast, and we're setting records at this moment. We're crushing it. So we appreciate your collaboration. Thank you again for your partnerships, your friendships. Like I did mention earlier, I will have my laptop on and my phone again this weekend. If you need anyone approved, mind you, underwriting's only taking 2 or 3 hours, even on weekends. It doesn't include Sundays, but they're definitely there on Saturday mornings and throughout the day. So if you need anything and you can't reach anybody, I'm here for you. Okay. That's it. Well, let's get them approved and let's get them under contract. Thank you for everything. Have a great day. Take care. Bye bye.